Should an investor buy the dip?
There is no such thing as buying dip. You have to figure out why you are investing, what are you in the market for, and what sort of time horizons work for you, and invest accordingly. This notion of buying the dip is, I think, sort of close to suicidal.
ये मार्केट थोड़ी अनिश्चितता की स्थिति के अंदर में है. ये मालूम नहीं हो सकता 2-3 महीना और मार्केट को सुधरने में लग जाए. तो आप ये मत सोचो कि आज मैं लूँगा, जो भी 3 साल में हुआ अगले भी 3 महीने में होगा. ऐसा नहीं होएगा. ऐसा हो सकता है आज आप लो और मार्केट 10% और गिर जाए.
Should an investor buy the dip?
Not yet. Maybe wait to spread over the next 3 months.
Where will Nifty be by 2024 end?
Maybe between 21 and 22,000.
An 800-point fall in Sensex, Nifty 50 closing below 22,600 has sent shivers down the spine of investors. Hello and welcome. You're watching The Mint and I'm Abhishek Singh. In this video, we're talking about what hasn't happened in 28 long years, but it is very likely to. The Indian markets are bleeding. For 5 months straight, benchmark Nifty 50 has been falling in what is turning out to be the worst rout in recent years. In 2025 alone, as much as 45 lakh crores of investor capital has been wiped out. If you add up the losses from the all-time high Nifty 50 made on September 27, 2024, investor wealth has eroded by a staggering 78 lakh crores. The decline has been much steeper in the mid-cap and small-cap segments. The market capitalization of BSE-listed firms, which stood at 479 lakh crores on September 27, 2024, fell down to rupees 446 lakh crores by January 1, 2025. Since then, another 45 lakh crores have been wiped out. According to Bloomberg data, excluding the ETFs and ADRs for the first time in more than a year, India's market cap has dropped below the $4 trillion mark. The sell-off was triggered by FIIs shifting focus to other emerging markets. The FII money went out of Indian stock markets and ended up in China and Japan. Global headwinds, including the situation in the Middle East, Trump's decision to impose reciprocal tariffs, has only hastened the pace of the outflow of capital. And now the Nifty 50 is staring at something which last happened almost 3 decades ago. Nifty 50 is on the verge of recording its longest losing streak if the ongoing trend continues in February. The decline would make this the first instance since 1996 when the index has fallen for 5 consecutive months, a rare occurrence that has happened only twice in the last 34 years. The persistent weakness in the markets comes amid aggressive selling by foreign institutional investors who have offloaded stocks worth over 2 lakh crore since October 2024, as a weaker rupee is making emerging markets less attractive. Let's quickly take a look at the instances when this happened in the past. Between September 1994 and April 1995, Nifty fell for 8 consecutive months. The total fall was of 31.4%. Next major losing streak was recorded between July and November of 1996 for 5 months. During this period, the Nifty 50 fell by 26%, followed by a losing streak of 4 months between October 1990 and January 1991 of 28.5%. The next major fall after that was recorded between May and August of 1998. During this period, the Nifty fell by 26%. Between June and September 2001, the Nifty tanked by 21.8%. And what started in October 2024, 5 months later, in February 2025, has resulted in a drop of almost 12%. Well, the reasons are multiple, including FPIs continue to sell, and now this does not require any further explanation. Suffices to say that this is, of course, one of the biggest reasons, other than overvaluation, which is behind markets dropping like a stone. Trump's traffic blitzkrieg and the expected counters have spooked everybody. The impact is being felt by markets across the world. Add to that slower economic growth, weak corporate earnings, stretched valuations, and you're staring at a bleak future. And last but not the least, as if Trump's stand on tariffs was not bad enough, strong recovery in the Chinese markets has further strengthened the tactical shift in FII flows. Since October 2024, India's market capitalization has shrunk by $1 trillion. while China has surged by $2 trillion. The Hang Seng Index has climbed 18.7% in just a month, in stark contrast to 1.55% decline in the Nifty. And this trend is likely to continue as Chinese stocks remain attractively priced. Which brings me to the most important question. Now, the Indian market is among the worst performing among major global peers in 2025, and analysts expect continued pressure on equities. They believe valuations across most parts of the market remain expensive. Motilal Oswal, in its recent report, said that Indian stock markets will remain in a corrective to consolidation phase for the next 3 to 4 months at least.
Should an investor buy the dip?
There is no such thing as buying dip. You have to figure out why you're investing, what are you in the market for, and what sort of time horizons work for you, and invest accordingly. This notion of buying the dip is, I think, sort of close to suicidal.
ये मार्केट थोड़ी अनिश्चितता की स्थिति के अंदर में है. ये मालूम नहीं हो सकता 2-3 महीना और मार्केट को सुधरने में लग जाए. तो आप ये मत सोचो कि आज मैं लूँगा, जो भी 3 साल में हुआ अगले भी 3 महीने में होगा, ऐसा नहीं होएगा. ऐसा हो सकता है आज आप लो और मार्केट 10% और गिर जाए.
Should an investor buy the dip?
Not yet. Maybe wait, spread over the next 3 months.
Where will Nifty be by 2024 end?
Maybe between 21 and 22,000.
In other words, sit tight until signs of recovery become clear. If you liked watching this video, please don't forget to like and share and to subscribe to The Mint.